Is the housing market finally crashing, or are buyers about to make a huge mistake? The truth is, it depends entirely on where you live. In some cities, prices are dropping fast and buyers are gaining more power. But in others, inventory is still low, keeping competition fierce and giving sellers a slight edge over buyers. If you're thinking of buying or selling a home right now, it's never been more important to know your local market as opposed to taking national trends and trying to translate those to your specific location. In this video, we are going to dive deep into what's happening across the country in these different markets because, yes, inventory is rising almost everywhere in the United States, but it's not rising in uniform. And understanding the nuances between different markets can make all the difference if you're looking to buy or sell a home right now. So we're going to dive right into these articles here to show you exactly what I'm talking about. But before I do, my name's Liam O'Reilly. I'm a realtor here in Vermont with Jerry Riley Real Estate. If you have any real estate needs, all of my contact information is in the description. Reach out to me directly and I would be happy to help you. So let's jump over to the first article here and we can dive into what I'm talking about. Okay, this article out of Fast Company. Housing inventory is rising just about everywhere. Just look at this map. And this is very significant for the overall housing market. We're not just seeing inventory rise in markets like Texas and Florida that appear to have way more inventory than there are buyers in those markets to purchase that inventory. We're seeing inventory rise across the entire United States. And according to Fast Company, national active housing inventory for sale is up 28.5% year over year, even starting to rise in the Midwest and the Northeast. And while this is true, when we take a look at this map, it's very clear. We can see that negative inventory year over year would be signaled by a orange little dot on this map. And we can see there's virtually no orange anywhere in the United States. And even markets like Vermont, according to the data that they're using in realtor.com, I believe they use realtor.com data to come up with these numbers. There's a 27% increase in active inventory year over year. But when we take a look back, this is a great example. We see that March of 2017, there were only 904 homes on the market here in Vermont. Compared to March of 2025, there's 274 properties for sale in the Burlington, South Burlington market. Now that's that's about 27% higher than it was the year before, but we're still well below pre-pandemic levels, well below where things were in 2019. We're about a third of what we saw in 2019, back when there were 722 homes on the market. And so that's really the story here with what's going on in the housing market, where most markets are seeing a year over year increase. Inventory is growing, and that's showing in home prices, that's showing in the housing market competitiveness across the entire country. But at the same time, it doesn't mean that the market is going to react the same across the country, right? If you're in a market like Texas, if you're in a market like Florida, where inventory is up significantly, both year over year and on historical levels, the market will behave much differently compared to Vermont or the Northeast, where inventory is up year over year, but is still down from 2019 levels. Now, this is the graph looking at active inventory for sale, according to realtor.com. Now, every data website out there uses different data. They use different metrics. So I don't know if this is just single family homes, if these are single family homes and condos, or if small multifamily properties are included in this graph as well, but we can see here a clear trend upwards. Inventory is currently at the highest levels that we've seen since 2020. We see that this gray line right here is the 2020 line. So that's the active inventory during the pandemic, right when the pandemic was starting. Then we can see here it dipped off and it never really recovered. We see here we're higher than we were in March of 2024, which is that yellow line, and the years preceding it. Now, when we jump back to 2019, we see that we're still about 300,000 homes short from where we were in 2019. So inventory is still low compared to 2019 levels across the country, although it is growing in almost every market. And that's really the key that we have to think of. Markets like Florida and Texas, where there's much more inventory compared to 2019. And we're going to jump over to this other article here to show exactly what I'm talking about. But those markets where inventory is much higher than 2019, you're going to have much more leverage. So this graph here shows exactly what I was talking about with that previous article, where this is the graph compared from 2019, March of 2019, compared to March of 2025. And we can see here, again, the dark brown dots are where inventory is lower than it was in 2019. We see not Rochester, New York has 73% fewer homes on the market today compared to 2019. Same with Hartford, Connecticut, 78%, Chicago, 61%. And then we scroll down, Memphis, Tennessee has 36% more homes on the market today compared to 2019 levels. Puerto Gordo in Florida has 89% more homes on the market than what they had in 2019. And why is this so crucial? This is so crucial because interest rates and buyer demand is much lower than what it was in 2019. Housing affordability is still very low. So the fact that there's more homes on the market than there were in 2019, and there's fewer buyers because fewer buyers can afford to purchase property right now, just in general, means that home prices in these specific markets are likely to go down. We are hearing reports that home prices are going down in some of these markets compared to where median sales prices were in these specific areas last year. Now, on a national basis, we are not seeing home prices drop yet. We are seeing home price growth lose steam. And I know my head cuts off the title, but basically what this Redfin title says is home price growth is losing steam as buyers back off amid economic instability and high costs. Buyers are uncertain. The stock market has gone down. People have less equity in the stock market than what they had just a few months ago. And at the same time, home prices are high. We see home prices are up 2.6% year over year. Median asking prices way up. So people are opting to overprice their homes as opposed to underprice their properties, which makes a lot of sense, right? If you think about it, especially in markets where there's not much inventory on the market, people are opting to test the market, to list for a higher price, see if there are any buyers willing to pay that higher price, and then they can always drop their price and try to get closer to what we estimate to be market value when we go and do, a market analysis, for example, as a realtor. Now, at the same time, if you underprice your property in this market, it's a lot different than what we saw during the pandemic, right? During the pandemic, if you underpriced your home, you could get multiple offers and your home will get bid up to at least market value, if not higher than market value, because there were so many buyers out there. So today, it makes sense why we see this drastic increase in the median asking price. We see home buyer housing payments are at an all-time high. It's at about $2,800 as I scroll up here, $2,819 at a 6.62% mortgage rate, which is a record high for housing payments. And that's for the median price home. When we take a look at the median sales price, it's $387,000. And I don't know what market that you are in, but I know here in Vermont, especially around Chittenden County, $387,000 doesn't get you a whole lot of home. A lot of times that home is going to maybe be a 3-bed, 1-bath starter home that needs some work, needs some renovations, and you're still paying $2,800 per month for that property. Now, at the same time, that monthly mortgage payment is still lower than what rent would be for that exact same home, at least around here where I am. If you're renting a 3-bed, 1-bath house in Burlington, you're paying $3,000 or more in rent. Now, you could argue with taxes and insurance, your monthly payment might be a little bit more than $3,000 a month. And I don't know if they're factoring in taxes and insurance when they're calculating this total cost, but still, it is expensive to buy. And that's why we're seeing home prices drop in some of these markets, particularly the markets where there's significantly more inventory than there was in 2019. And that's really the key point of this video that you want to keep in mind as a home buyer or a home seller out there is there's reports and there's people talking about how the housing market is changing, how home prices are going to come crashing down, how we're experiencing another 2007 housing market crash. And in certain areas, we will see home prices come down because inventory exceeds demand by such a wide margin. But in markets where inventory is low compared to historic levels, it's unlikely that we are going to see supply significantly outpace demand because demand is already about as low as it can be, right? Home prices are high, mortgage rates are high. It's very unlikely, at least in my opinion, that we'll see affordability start to decrease, that things will become more unaffordable moving into the future. It's more likely that eventually we will see rates start to come down, and that will bring more affordability into the market and help stabilize these prices. But at the same time, even if affordability doesn't come down, we are not seeing home prices drop in these tight inventory markets. And so you have to be very careful with the data that you're using to make your home purchase or home sale decision, because if you're using information from somebody who's talking about the Florida market and you're trying to buy in Boston, then you're going to have a completely skewed view that's wrong of what's going on in the Boston housing market, because they're behaving completely differently. Florida and Boston are not behaving the same at all, right? A few years ago, they were. During the pandemic, they were. Now they're not. Now let's take a look at some other stats. Pending sales down 1% year over year, so not much change there. New listings up 11% year over year, which makes sense. That's why there's more inventory on the market. More people are listing their homes. About the same amount of people are putting those homes under contract. I guess slightly fewer, but roughly the same. So more homes are hitting the market. About the same amount of people are putting those homes under contract, which is causing inventory to build across the country. Active homes for sale, according to Redfin, is 12% year over year. Now, again, they use different numbers to track this data. According to Fast Company, which used real data from Realtor.com, they said that inventory is up 28.5% year over year. So regardless, inventory is up year over year. Month supply, this shows that we're in a balanced market across the country. But again, it's not a balanced market everywhere because things are so skewed, right? In the Northeast, month supply is still most likely lower than this 4.1 month supply compared to Texas and Florida. And these markets where things are slower, the month supply is much higher. So while it's a balanced market nationally on an average basis, your specific market likely does not meet this 4.1 month supply average that we're seeing here. So to wrap up this video, basically the whole point of this video is you need to understand your local market. You can't just take somebody's word for it. I'm not here trying to tell you that your specific market will crash, your specific market won't crash. What I'm here to say is that look at the active inventory levels. Is it higher than it was in 2019? Is it lower than it was in 2019? If it's higher than it was in 2019, then you're at a higher risk home prices declining both now and moving into the future, because it's going to take some time for demand to come back into the market, even if we see rates drop in the near future. But so far, rates are not dropping. Demand is still low. So if inventory is higher than 2019 and demand is lower, then home prices will come down. But if at the same time, if inventory is lower and demand is lower, that's a recipe for stable or slightly increasing prices. So let me know what you think. Thank you guys so much for watching. I really appreciate it. Leave me a comment and I'll see you in the next video.